Okay, now we will come to the same question, which is the part B discussion. Question 1, part B discussion. This is again totally, this is on the, it's a one side testing on the investment income and the employment income of the resident individual. And again in the other hand, which is testing of the gain from the realization of an investment asset plus the special situations of the realization. Then I am highly concerned, I don't know, then when even discussing even the papers in the past paper discussion, the special realization provisions, there are 6 the realization situations are given in the section 39 of the Act. Then with reference to that, the realization situation with the asset realization has tested. Then this also the same kind of that with reference to individual. The 2 individuals, the associated person being a father and the daughter. Okay, then which is applicable under section 46, and this is on the that particular discussion. And I need to tell you all, since this is individual taxation, this is kind of the tax plan inside and the evaluation of the particular decisions and how what is the tax implication after taking the decision. Then therefore you should have the clear knowledge with reference to the individual taxation. It's applicable for non-resident as well as the resident. Then individual taxation, that clear knowledge which you have learned under BL7, the carried forward or brought forward knowledge is essential when doing this part. I'm highlighting this, your brought forward knowledge. It's really important, and again I need to tell, you cannot go with the selective learning, this special realization provisions. It's very, very important. In previously it has tested, and this time that's meaning in the subject to this discussion, in the paper it has tested in a different manner. In future also it can be tested. Therefore, please go through this special realization provisions in the realization of assets on behalf of the person. Okay. Now let me come to this, the question 1, the part B discussion. In that, let me come to the requirement. It's for the 10 marks. Let me come to the requirements. The Roman 1, calculate the capital gain tax and the stamp duty. What it asking, you need to calculate the this is the action verb, calculate the capital gain tax, and there is a sub requirement and the stamp duty payable on each transfer with supporting notes. Now your answer, Lamai, you can see on each transfer. Then by looking at this, you can understand there are more than one transfer is there. And secondly, supporting notes. For the 6 marks, Lamai, it's requesting the supporting notes. Now you need to obtain a 6 marks, you should have the supporting notes by explaining the things what you have included to your answer. Clear? Then this is the first requirement. The second requirement, the Roman 2 in the part B, what's the action verb? It's the assess the income tax liability of the Shashini for the year of assessment 2021. I'm taking the same year of assessment. Ignore EPF and ETF contributions. Now this is it's a computation of the taxable income and tax liability of the resident individual, and this ignore EPF and ETF contribution. Now this is applicable to the employment income. Keep in mind, from the employment income, no deduction shall be allowed. Then, in the section 10, subsection 1A, it's very clearly given, from the employment income, no deduction shall be allowed. Then, therefore, what is the amount you are receiving, the gross amount is subject to the income tax. You know that EPF 8%, it is the deduction from the salary, no, that deductions shall not be taken. And again the EPF 12% employers contribution, ETF the 3% employers contribution, these are receiving under the terminal benefits at the point of the retiring of the employment. Therefore, for the present employment, we are not considering these contributions either. Okay, clear? Then these are the two requirements. Let me come to the PPT in here, which is the okay, this is the two requirements which I need to come to you all. In here, in part B, Roman 1, which is talking about the calculation of the capital gain tax, the calculation of the capital gain tax and the stamp duty with supporting notes. The with supporting note, it's something compulsory you should need to know. Now the two sub requirements, capital gain tax and the stamp duty, the two things you should include your answer. And third one with supporting notes, for you to obtain the 6 marks, entire these 3 requirements should be fulfilled with the calculation done. The next one, the assess the income tax liability of resident individual was the testing is the assessable income from employment and the assessable income from investment with reference to the resident individual. Entire it goes to the 10 marks. Now let me come to the details of the correction. Then here what it has given in here, very few information. The Shashini is a newly qualified chartered accountant who left her hometown Hambantota to work as accountant at Smart Private Limited in Colombo from 1st June 2020. Now Lamai, what's the testable year of assessment for this paper? For your paper it's a 21-22. With this information I couldn't directly go for 21-22. That's why I'm taking these things as it is, and if there is any change to this with reference to your year of assessment, I will explain. Up to now, no. When necessary, I will do so. Then it's she has started her job on 1st June 2020. Then Lamai, what's the year of assessment? It is 2021. Then in the 2021 this period, then what has happened? Then she has received the gross salary of rupees 3,120,000. It's given per annum, per year. Then it's a year of assessment starting from 1st April ending with 31st March. April, May, 2 months, no salary for her, but from June to 31st March, that means entire the 10 months the salary is applicable. For entire 10 months period, the salary is applicable. Okay? Then her salary after tax and other contributions. Salary after tax mean what is the applicable tax for salary is APIT. Let me explain that one also with this. The advanced personal income tax with effective from 1st Jan 2020. It shall be deducted if the employer has given the consent to deduct. Then it should be the salary, the remuneration should be more than 250,000 per month. Then if the Miss Shashini has given the consent to deduct APIT, if her salary limit seems to be more than 250,000 in average, if so, APIT shall be deducted. Only the employer has only the employee has given the concern, and with reference to non-resident individual, it's a compulsory to deduct APIT. Then the two differences I have explained. Then anyway for this computation, the APIT, it's a not particular information given. The tax and other contributions were insufficient to meet her expenses in Colombo. Now she is receiving the amount, but it's insufficient for her to live in Colombo. As Sashini had no other income on 1st June 2020, what happened? Her father, Mr. Channa, transferred to her at no consideration, very important, at no consideration, some unquoted shares, private equity shares, not the listed shares, unquoted shares and property in Hambantote. The Shashini, I think it's a happy of father being a chartered accountant, then father has transferred this property to her as a gift. That's why it's these are the from father to daughter as a gift, or it's a no consideration it has received. That would generate some additional income for her. Channa did not have any other capital transfers during the year. Now you need to look at Lamai. There is a Mr. Channa and there is a Shashini, the daughter. Then who is the transferor? Mr. Channa. Who is the transferee? Who is the beneficiary? Is the Shashini. Okay. Then unquoted shares, the details of the unquoted shares are given. These are the details of the unquoted shares. Channa acquired these shares on investment in January 2015. Now it's a long due. With the January 2015, the today when the exam, it's a 2021 year of assessment, then it's a 5 years nearly. The 6 years, Mr. Channa has hold these shares where the what is the cost is the rupees 150,000. Whilst the market value of the shares as at 30th September 2017 was rupees 200,000, the market value of these shares at the time of transfer was rupees 250,000. Why Lamai this has given? First thing, you need to identify the intention of Channa being holding of these shares till from 2015 Jan to the 2020 June. How many years? Nearly 5 years. What is the purpose? Is it trading purpose? Is it business purpose? No. Is it for the capital up? That means from that capital asset held for the investment purpose, it held for 5 years. Then is a long due. It has Mr. Channa has kept with him. With it, what's the intention? It's an investment intention. Then the shares are what Lamai? It is an investment asset. It is the investment asset. You should go with the definition of the capital asset, and you should need to go with the definition of the investment. Done. Now it has recognized as investment asset. You need to compute the capital gain. That's why Lamai under section 203, the transitional provision, it has given if the asset has acquired the prior to 30th September 2017. At the point of disposal, we need to take as the cost is at the exhibition cost. No, we need to take the valuation as at 30th September 2017 and we need to take that value. Clear? That's why the valuation rupees 200,000 for these shares given, then 150,000 no validity on behalf of that. The market value, I'll come why the market value we need. Legal fees incurred by Channa relating to this transfer rupees 5,000. Lamai, what is this? Under the cost of an asset, the section 37. Section 37. The cost of an asset, in that it's very clearly given, which is the incidental expenses. Incidental expenses upon the disposal and the exhibition of the asset. This is on the disposal of the asset. Done. This is a part of the cost which you can deduct. And Shashini derived a dividend income of 41,667 from the above shares. The dividend income didn't include any exempt dividend as the investage in the Inland Revenue Act. Then as the investage in the Inland Revenue Act, there is no exempted dividend. What are the exempted dividends, Lamai? The dividend received out of the dividend income by the another resident company, then it is exempted. Then but for Miss Shashini, all these 41,667 is the dividend received out of profit, no exemptions. This is on the unquoted shares. Now with this, let me come to the computation of the it's a question it asking Let me come to here. It asks in the computation of the capital gain tax and the stamp duty. Let me come to first the computation of the capital gain tax. Okay. Now, question here. Okay. I think it's visible. Okay. Then capital gain tax on the realization of the investment asset. What is our investment asset? Transfer of unquoted shares. This is the thing. It is the transfer of the unquoted shares. Then what is the consideration? Now in the question it has given the Mr. Channa has transferred it to no consideration. Transferred it under the no consideration. Now Lamai, can we take this as like in the no consideration? We can take it as under the no consideration if there is no provision as section 46 in the Act. Let me come to the provision of the section 46. Since it's important, I have taken it here. Okay, then this is the special provisions under realization. I am highly telling for y'all, go for section 39, the realization. There are 6 situations in the realization has provided, including link to section 70, which is changing of the residence with reference to non-resident and resident individuals. Please refer that 6 situation and come to these special situations on the realization of the asset with reference to individuals, companies, that's mean spouse, former spouse at the time of the death. Likewise the situations are there. Then is please go through the starting from the section 42 to the realization of asset, starting from section 42 to section 51, and again if not mistaken please go with the section 63 and 64 also. These are special situations on the realization. Please go through these areas before the exam. Okay. Then what we need to look at, how this section is applied. This is applied the subject to the particular to section 44 and 45, where the person realizes an asset by way of transfer of ownership of the asset to the associate person. In our case, is there is associate person? Yes, Lamai. Who are the associated person? The 2 associated persons are the father and the daughter. One is the father, Mr. Channa, and the other one is the daughter, Miss Shashini. Then these are the associated, these 2 are associated person. By way of transfer or any other person by way of gift. These are the situation. Then therefore, how to recognize the cost and the consideration it has given in that situation. If the asset were transferred it between associated person under the no consideration or by way of the gift, a person shall be treated as deriving an amount in respect of the realization equal to the greater of the market value of the asset or the net cost of the asset immediately before the realization. We need to go for in the scenario basis the market value of the asset and the net cost of the asset. These are the 2 situations, and let me come to the rest of the part in the explanation in here. Then again here, okay, done. Then okay, then I need to come for the application for the individuals and charitable. Then here we are looking for the individual. I need to come for here, where an individual realizes an asset by way of transfer of ownership of the asset to an associate of the individual though charitable and requirements of section 46(3) are met. Let me come to the requirements of the section 46(3). In that, in the case of the transfer to the asset should be transferred in between associated person. In our case, Lama, is it transfer in between associated person? The answer is yes. In here, the answer is yes. And second one, the associate in relation to individual, the individual child by marriage or adoption is spouse the relationship has given. Is it so? Yes, the second condition also satisfied. In that, the Roman 2, the asset is an interest in land or building situated in Sri Lanka. Now the asset is an interest in land or building situated in Sri Lanka, but in our case, in here, this is the shares it has given. Shares it has given, we will see how it applicable. We will see how it applicable. And again, the next one which I need to come. Okay, then the B, in the case of the charitable institution, the transfer should be occurred by way of the gift, but it is not applicable since we are looking for the individual. Then first thing, this has transferred in between associated person. Then it's an individual, there is a daughter, and this condition for the shares not satisfied, but in the second one the property is also satisfied. Then how to take the value? Let me come to here. Now this section 46(3) condition satisfied. At the point of transfer, what you need to do? If the section 46 subsection 3 are met, the individual, I am looking for especially this, the individual shall be treated as deriving an amount in respect of the realization equal to the net cost of the asset immediately before the realization. Then net cost of the asset immediately before the realization, but this is applicable for it should be transaction, it should be done in between associated person and its property should be situated in Sri Lanka, and this applicable for land and building. Therefore, for the shares, this provision we cannot apply. Then what we shall apply with reference to the shares, that's why I came into first here. Make apply when naikila penla thamai mata apply when eka pennanda wenne. Then this is we are using the net cost. Now come to the first part, section 46 subsection 1. It has given where the transfer of ownership of the asset to an associate of the person by way of the gift, the person shall be treated as deriving an amount in respect of the realization equal to the greater of the market value of the asset or the net cost of the asset immediately before the realization. Lamai, for shares, can we take the net cost of the asset? Is it satisfy the condition of the section 46(3)? No. Thereby, as the consideration from the side of Mr. Channa, we have to apply what, Lamai? Market value. Understood? We need to go for the concept of the market value even it has transferred in the no consideration according to the section 46 subsection 1. There should be a consideration for the person who transfer the shares. What is the consideration? It's a market value. It's 250,000. That's why in the question, it has given in the question, it has very clearly given which is the market value. These shares at the time of the transfer was rupees 250,000. When doing the calculation, we need to take as the consideration, we need to take the consideration minus cost of an asset. Shares are the investment asset, then thereby we need to compute the gain from realization of an investment asset, lamai. Then the consideration is 250,000. The cost of the asset, purchase cost, which is 150,000, it is not relevant. Why it is not relevant? Because since the purchase has taken place before 30th September 2017 done, cost of the shares based on the valuation made 30th September 2017, in the question it has given rupees the 200,000, then it is the cost because the shares acquired prior to 30th September 2017. We need to go with the valuation and the transitional provision. Incidental expenses under section 37, which is legal fee upon the point of the disposal, rupees 500,000. Then entire cost of the entire cost 205,000. Now what is the gain from the realization of investment asset? 45,000. Lamai, can you apply 10% on this? In my case, no, you cannot apply. Why? This is a gain from the realization of an investment asset on the hands of the resident individual. Then this is subject to exemption. What is the exemption? Under third schedule, it is very clearly given. For resident individual, if the gain from the realization of an investment asset, if it is less than 50,000 rupees, is it subject to 10% of CGT? No, then this is under that. Now you can see how far you should remember all these things. This is the gain from and how link it for the practical scenarios. Okay, the gain from the realization of the investment asset, it is 45,000. Then therefore capital gain on the realization of the investment asset, let me come to the answer. Capital gain tax at 10% not applicable since the gain does not exceed rupees 50,000. No CGT. And again we are in the requirement asking stamp duty for shares on the market price of the shares, no stamp duty is applicable. Then therefore for the shares, no stamp duty applicable. Then therefore this first part it has completely done. Now stamp duty done, gain from realization of investment asset done, the application of the capital gain tax done. But where are that supporting notes? Come to that supporting notes relevant to computation. All the assumptions we have to put here. The first one, why we have taken the market value, consideration for transfer of unquoted shares shall be market value as per provision of the section 46 subsection 1. What is the section 46? Transfer of assets to an associate or for no consideration. I have mentioned or I have taken that section and explained the particular provision. Second one, to taken this 30th September 2017 valuation irrespective of the purchase cost in 2015. The reason is as per section 203 subsection 4, which is section 203 represent the transitional provisions. Then in that if the investment asset acquired prior to 30th September 2017, the cost of the asset shall be as per the valuation made on 30th September 2017, not the exhibition cost we can take. And why we have not taken the capital gain tax at the rate of 10% on this gain, which was the 45,000, reason there is no capital gain tax for share transfer due to the exemption under third schedule, being the gain not exceeding 50,000 for resident individual. Done. Now for this you should have the knowledge of the investment income and the computation of gain from realization of an investment asset with the exemptions, with the transitional provisions, and again you should need the application of the section 46, which is the special realization provisions, Lamai. This is something key, special realization provisions, which you should need to look at. Okay, done. Now let me come to the next one, which is the second asset, which is the property in Hambantota. Channa inherited this property from his grandmother 50 years ago. Now, why this particular information provided, how Mr. Channa has received this and all, because to you to see the intention of the asset. This is the additional or the inherited property, inherited property from the grandmother 50 years ago. Then that means this is an investment asset. Then the market value of the property as at 30th September 2017 was rupees 1.2 million. Now the 50 years ago mean obviously this property has obtained prior to 30th September 2017 and it was worth rupees 1.5 million at the time of transfer. This is the market value of the property. At the time of the transfer, this is the market value of the property. The legal fees incurred by Channa relating to this transfer, rupees 10,000. This is the legal expenses. This is incidental expenses under section the 37. Then Sachini derives monthly rental income of rupees 50,000 from this property. From 1st June 2020, again it goes to 10 months. She is receiving which is rupees 50,000 per month. This goes to the 10 months period. Okay, done. Now, why we need this market value of the property lamai? Make a mokadada. Now 30th September valuation has given, you know, if the section 46 subsection 3 that provision satisfy, you need to take the net cost as a consideration. But why this examiner has given this story of the 1.5 million? Now my reason is for this. What is the reason? Reason for you to compute this is the stamp duty payable. For you to compute the stamp duty payable. Stamp duty is paying on the market value. It's not on the not on the as to the provision of section 46. Then therefore, with this all the information they gradually provided for you to come to the answer. Then therefore, let me come to the answer again. Okay. Then here, okay, let me come to the answer, which is part B. It's a Roman 1, the part 2 discussion. In here, now, what is the, how to compute the gain from the realization of investment asset? What is the investment asset lamai? It is the property at Hambantota. It's a property at Hambantota. Okay, done. Then consideration, it's a consideration equal to net cost of the asset. Y is come to here. Now, we know the section 46 subsection 3 provisions are met. The transferee, transferor, how to recognize the gain on this, the transfer between associated person. Then here, it's a transfer with the associated person it has given, and interest of the in the land or building situated in Sri Lanka. All these conditions satisfied. If so, what we need to take lamai? The individual shall be treated as deriving an amount in respect of the realization equal to net cost of the asset. Immediately before the realization, this is realization happened on 1st June 2020. Immediately before the realization net cost we need to take, and how now it's a transfer at the gift, the net cost we need to take, go for the section 195. General interpretation section and go for the definition of the net cost. Okay, then here it's a realization equal to net cost of the asset immediately before realization, and the person who is acquiring the asset, the role of effect is there. The person who is acquiring the asset, it's a incurring expenditure of the amount referred to in paragraph A in acquiring the asset. Mr. Channa is transferring the asset at the net cost, and also Ms. Sashini is acquiring the asset at the net cost. Then the consideration equal to net cost then the cost or the property value, that the cost of the property, it should be equal to the net cost. Then the gain is 0, lamai. The gain is 0. That's why these are special situations under the provisions of the realization with reference to the associated person. I think it's clear. Now come to the answer, which is consideration equal to net cost of the asset. The net cost, how to take the net cost, lamai, is a 30th September to, this is the net cost, the 30th September 2017 valuation, and the legal fee, this is the net cost. Since there is the same effect, we need to take it as per the information provided in the question, and less cost of the asset, purchase cost irrelevant, we don't know, it's received as a gift from grandmother, then the value we don't know. Cost of the asset based on the valuation as at 30th September 2017, it's 1.2 million. Incidental expenses, it's 10,000, which is the legal fee, and finally the net cost is this. The cost of the asset is this as per information provided. Net cost also the same. There is no gain on this. Gain from the realization of investment asset 0. Capital gain tax on the realization of the investment asset. Since gain is 0, no CGT. At the 10% nothing. The stamp duty on transfer of property, it's on market value. Don't forget these things. Stamp duty is not computed based on the 30th September 2017 valuation or net cost, nothing. It's on the market value. This is a property transfer, lamai. That brought forward knowledge is essential. This is a property transfer. With reference to the property transfer, you have to pay it to the provincial revenue departments. Then in the stamp duty, lamai, stamp duty collected in two authorities, Department of Inland Revenue as well as the provincial revenue departments or revenue departments. Then this should be paid to particular region, that provincial revenue department. Then this is the stamp duty has established with the Stamp Duty Special Provisions Act, and there are gazette notifications. Then in here it's the first, this is the transfer by way of the gift. Now it's divided by way of the gift and in any other way. For the by way of the gift, on first 50,000, it's a 3%. After that, it's the 2%. Then for this is the value, market value of the property, or the given in the question. It has given in the question as the 1.5 million. In that first 50,000 at 3%. And 1,450,000 at 2%. Then this is it's a calculation based on that. It is a 30,500 stamp duty. You have to make the payment. Okay, this is on the stamp duty, capital gain tax, and the gain we have done. Come to the special notes. These are the special notes relevant to the computation. The supporting notes relevant to computation. In here, one consideration for transfer of property by way of gift by an individual. If the consideration in section, in the conditions in section 46 subsection 3 met, I have explained all these, shall be the net cost of the asset as per section 46 subsection 2. The section 46 was the provision, transfer of asset to an associate or for no consideration. Net cost of the asset, please go through section 195 and please refer to that definition. Therefore, no gain on this realization. Done. As per section 203 subsection 4, you need to take the 30th September 2017 valuation because the property at Hambantota has acquired prior to 30th September 2017. Done. Almost the 2 requirements we have completed. It's for the 6 marks. The time management is essential. For 6 marks, you have to do these 2 calculations. Let me come to last one, which is very easy for the 4 marks, which is talking about we need to compute the income tax liability of Miss Sashini for the year of assessment, the 2021. I'm taking the same way. And what are the income? Employment income is there. Under the investment income, dividend income, and the rental income is there. Now, what is the when computing the resident individual, what you need to know? You need to know the assessable income of that resident individual, and especially you should need to know about the qualifying payments and the relief. The qualifying payments and the relief applicable to that resident individual. Let me take qualifying payments. You all know under the resident company taxation, the same the qualifying payments in that with reference to the 5th schedule and the section 52, in that please refer. And the relief, we have the tax-free allowance. Let me summarize. Tax-free allowance for that individual, resident individual only, and resident and citizen individual, and the tax-free allowance. After that, we have the expenditure relief. If you aware on these things, it's advantage for you all. Then it is expenditure relief. Expenditure relief. In the expenditure relief, 5 expenditures, medical expenses incurred on behalf of that resident individual. It's only applicable for resident individual. Second one, invested in shares in the listed entities, in the, that means invested in listed shares. Third one, contribution to the pension the plan. And the fourth one, which is that medical expenses including the medical insurance. And next one, the educational expenses of the children. And the it's the fifth one, it's medical expenses and the shares invested, and the it's a fifth one is a housing loan interest. Suddenly it's forgot. Housing loan interest, and these are the 5 expenditure relief per annum up to 1.2 million. Sorry, up to 1.2 million you can claim. And finally there is a rent relief on the rent, which is the 25% on the 25% on the repair allowance, which reference to rent irrespective of actual repair or not. Then we need to compare it with the actual repair. If there, then we need to take the best course of the deduction with reference to that. And again we have the investment in solar panels. The solar investment we have for the individuals. Please look at these things. Please look at these things. Now with all summary, let me come to the correction. Then it is a computation of income tax liability of resident individual. This is actually coming with the taxation and business decision making, which is 10% of your area in the syllabus. The year of Ms. Sashini and the year of assessment 2021, this is a calculation. The assessable income, under the assessable income, you have the employment income. Now Lama, in the paper it's given the per annum employment income. Don't take it as it is. Only apply this only for the 10 months of the period. I have explained. Apply this only for the 10 months of the period. Then okay, then apply this for the 10 months of the period. In there, here it is total is a 3,120,000. It's for the entire 12 months. Only take for the 10 months. Investment income. Under investment income, you have 2 things. One is a dividend and rent. Take that. In the dividend, it's given, it's a out of profit, no exempt dividend. It's a 41,667. Rent income, it's a 50,000 per month from the 1st June. Then there are 10 months. Then altogether it is here the 451,667. This is my total assessable income. Deduction from assessable income, we don't have any qualifying payments. We have only the relief tax-free allowance. It's for the 3 million tax-free allowance for year of assessment, and 25% of the repair allowance, which is on rent income, is the 500,000 on that 25%. Then taxable income 16,667. The resident individual will be taxed at the first 3 million on the taxable income, first 3 million is at 6%, next 3 million is at the 12%, and on the balance it at the 18%. Then here we go, it's a 6%, then the gross tax liability is rupees 10,000. Okay, Lamai? Then this is the end of the discussion of the question 1. I think it was a lengthy discussion with the explanation on the non-resident and international taxation. I think it was useful to you all. Go through this, go through all the syllabus areas before your exam, practice these things. The critical success factor for you to pass the exam 1 is doing the past papers. Please go through the past papers, do that past papers and practice, time it and do it. Then with this, let me complete the question 1 discussion of the December 2021 paper. In that part 1 for the 15 marks for non-resident and international taxation, part 2 the taxation and business decision making with reference to the with reference to the individual person, covering the investment employment of that particular individual, and again in the gain from realization of the investment asset and stamp duty. Okay, then this is the end of the discussion of the question 1 in the section 1. Okay, now come to the in the section 1, in the same section we are in that the question 2 discussion. The question 2, if I have analyzed in from the beginning in the past papers, question 2 is one of the, it's an average question for student to score marks. One of the is from the past to this paper, one of the very good question, and the student can score marks in the entire paper. This is one of the easiest question, and coverage and it's asking everything, it's benefited to the students. Then that's why it's, from my angle, it's good. Then it is really benefited to the question, and if as a whole, when taking the December 2021 paper, it's one of the from the student side, one of the great paper for you to pass. Then it's again I need to mention the student from the student side who has done good. Then this paper is one of the privileged paper for you all. That much it is organized. Okay. Then here the question 2, this is for the value added tax, which is goes to 10 marks. I am directly coming to the question. In here it's a requirement, assess the balance tax payable for the quarter ended 31st March 2021 per the provisions of the VAT Act. Then it's a 10 marks the calculation. Okay. Now let me come to the action verbs and this explanation on the question. In here, this is the question 2. Before going for the question, let me come to this question, how it has structured. Then in the section 1, question 2, it's a value added tax, and it's a second part which the 15 marks it has goes to income tax with the different angles. Okay. Part A, which we are going to do, assessing the balance VAT payable for the taxable period, which is for the 10 marks. Our taxable period is the quarter ended the 31st March 2021. Okay. When it comes to the value added tax, please go through all the relevant theory areas. Exemptions is essential for you to know, and the the definition, tax administration part, all these things, the input, how to claim the input VAT, section 22 subsection 6, and all these things within the syllabus, what it has mentioned, it should be, you should know. Okay. And then the next one, explain the validity of claiming of input VAT as per the provisions of the VAT at 5 marks. One of the great question, if you know these theory areas, easily you can obtain this 5 marks. This is not the first time that claiming of the input VAT has tested. If you have gone for that 50 marks question, even I couldn't remember, even it's a under 2015 curriculum, then even that it has tested the claiming of the input VAT. Therefore, this claiming of input VAT with reference to exempted supplies, with reference to that time limit, how to claim, then all these things you should remember. And the next one in the part C Roman 1 is totally on the income tax. In that the analysis of deductibility of expenses when arriving into business income and supported with case law provisions. Then the deductibility of the expenses, it's a justification whether this expense can be deductible or not. With reference to this person, you should need to support it with the case law provisions. Then the deductibility, it should be supported with the case law provision. We need to look at that. And okay, then here the case law provisions, you need to look at the application of the case law provision, not only the provisions of the deductibility criteria which mainly given in the Inland Revenue Act, you know that main deduction rule and all, but you need to apply the case law provisions. For the 6 marks you have to do this. And the last one, outline on the penal provisions on not compliance with the payment of income tax and the filing of return of income. 5 marks, this is clearly with the application and the theory knowledge you have to write. This is one of the question which I highlight for you to take the maximum benefit of the open book referential material. And again, this deductibility of expenses when writing the theory part with reference to provisions of the main deduction rule and all, you can use the book for do these things. Then therefore, from this 15 marks, it goes to value added tax. The rest of the 11 marks, the rest of the 10 marks, it goes to the income tax on the application of the case law provision with the provisions of the Inland Revenue Act, and the tax administration part, which is case law also going on the statutory provisions. And again, this goes to the, which is the penal provisions applicable to the for non-filing of the return and the non-payment of the income tax. This is the overall of the question. Then let me come to the paper again with the discussion of the requirement. Then I'm starting from the calculation part. Assess the balance tax payable for the quarter ended 31st March 2021 per the provisions of the VAT Act. Come to here. What is this? It's a New Pack Lanka Private Limited. NPL is a company incorporated in Sri Lanka. Okay, it's incorporated in Sri Lanka and engaged in business of manufacturing and selling of plastic packaging items. This is the principal business activities, manufacturing and selling plastic packaging items. When doing the VAT calculation, it's essential for you to know what is the principal business activity. Based on that, you need to identify exemptions, zero rated supplies, whether this SVAT, claiming of input VAT and everything. The local and foreign customers, now they are supplying to local and foreign customers. Since there are foreign customers, there should be export sales. The following information was extracted from the quarterly financial statements prepared for the quarter ended 31st March 2021. This is the taxable period which we need to assess the VAT liability. Okay. Then revenue direct export sales exclusive of VAT. This is the zero rated supplies. And let me first come to the facts and explain, and I will come to the answer. Direct export sales, SVAT exclusive of VAT. This is for the SVAT supply at the rate of the 8%. And next one, local sales inclusive of VAT. It's a 85,000 local sales exclusive of VAT 85,000, local sales inclusive of VAT 21,600. Then this is, let me come to the notes. The other income, profit on sale of office furniture. This profit, this is something accounting, we are not taking this for the VAT. Then we need to take the consideration, but for the consideration we will look at whether it's given in the question or not. Okay. Now let me come to the the rest of the part, additional information. In the additional information, what it has mentioned, NPL is registered as a registered identified supplier. That's why we have indirect export, SWAT. Then we have the gazette notification. Lamai, please go through this gazette notification. One of the past papers, if not mistaken, it's a, no, I couldn't remember, it's a March 2021. No, after that paper, the penal provisions relevant to the not adhere to the SWAT scheme, it has tested. Then therefore, please go through these things. It's additional thing which I have mentioned, and which is NPL is registered as a registered identified supplier under the SWAT scheme and supplies goods to registered identified purchaser issuing SWAT invoices. That's why this is the suspended value added tax at the rate of 8%. You should need to take the tax credit under the SWAT credit voucher values when we are computing the VAT payable. Then next one, local sales inclusive of VAT include the supply of specially designed plastic cups manufactured using only local raw material. That's why I'm telling you should maintain your quality of reading. Now the local sales exclusive of VAT, which is addressing this part, Lamai. Addressing this part, what it has mentioned, include the supply of specially designed plastic cups, okay, manufactured using only local raw materials. We may have import raw materials, we may have local raw materials. Now this specially designed plastic cups, this is manufactured only on using the local raw materials, amounting to 6,500 to UK Embassy in Sri Lanka. Now this is the application of your knowledge on the value added tax, in the first schedule part 2, which is on the exemptions. Exemptions, you should have that knowledge, Lamai. This is the sorry. This is the supplies to the diplomatic immunities, persons in the diplomatic immunities law, the diplomates, the US Embassy. This, if you have done the past papers and you have gone to the exam, this is one of the easy thing for you. Then the US Embassy, these are diplomates, any supply to diplomates, it is exempted from VAT. For me, this is 85,000 includes the rupees 6,500, which was the exempted supply. You need to recognize it as the exempted supplies. Done. NPL supplies its products to local customers who are not registered for VAT and issued the inclusive invoices. We have two kinds of the invoice. One is a tax invoice, other one is an inclusive invoice. To the person who not registered for VAT, we cannot issue the VAT invoices, we need to issue the inclusive. Inclusive means what it has been included? It is the particular value added tax component 8% has included. Therefore, for compute the correct value of supply, we need to divide this by 108 and we need to take this into 100. I think it's clear. And the next one, the during the quarter, NPL sold some of its office furniture of for rupees 2.5 million. It's exclusive of VAT. This is the consideration. This consideration we need to take. We need to take the consideration instead of the profit. We need to take the consideration, and it is the exclusive of VAT. Then therefore we need to take it as the 8%. Then input VAT details for the quarter ended 31st March 2021 is as follows. Input VAT paid on the customers, it is 1 million, customs, it's on the Sri Lankan customs, then it is 1,150,000. Why it is important? Because now we have the exempted supplies, but for that this import raw materials is not relevant. That's why I'm telling you you should maintain the quality of the reading. And this done, and the input VAT on local purchases, when we are computing the disallowable input VAT lamai, we need to only take this with reference to the exempted supplies. And unabsorbed excess input VAT brought forward rupees 350, which is from the previous taxable period, which is the 31st December 2020. Then there is unclaimed unabsorbed excess input VAT. Okay, now all the details there to our computation. Monthly VAT payments made during the quarter amounting to rupees 2,850,000. This is a tax credit in the VAT. NPL received credit vouchers 760,000 in respect of the quarter ended 31st March 2021. This is for the SVAT credit voucher value for us to take as a tax credit. Okay, now let me come to the answer, which is the with reference to the 10 marks question. With reference to the 10 marks question, let me come to the answer. Okay, now come to the answer after the explanation and all. Then this is a New Pack Lanka Private Limited. This is the tin, and this is the format value-added tax computation for the quarter ended 31st March 2021. This is the format which I'm using, but y'all matured, then y'all can, if this is, it's easy for y'all, whatever the good method you can use for do the calculation, but this is the, for me, and I think this is convenient to the students. That's why I'm using this one very in the clear way. If you really need to change this for your easy reference, please change this, no matter. It's only thing time management and present your answer in the correct manner. Okay, then we are starting from the output VAT, which goes to our revenue. Then this is the description. In that we have the export of plastic packaging items. It is exclusive of VAT. It is in the paper. It has given lamai 32,500. Then it is at the 0 rated supplies. Okay, then we have indirect export, which is suspended supplies. It is also exclusive of VAT. It's a 9,500. It is in the question given. Then in that it's at the rate of the 8%. Okay, 760 when applying that. Then it is the local sales, exclusive of VAT, but here we have to do the adjustment. In the paper it has given as the 85,000, but we cannot take the 85,000 as it is. Why? This has included the exempted supplies, which the supplies made to the diplomatic immunities, which is the UN embassy. Then from this 85,000 we need to deduct the 6,500. Okay, then in that same thing, in the local sales to US embassy exempted, which is supplies to diplomats, in that you need to take it as the exempted supply, which is 6,500. Done. Then the same thing in the 85,000 we have divided into 2. Then lamai, don't forget, then since we have done it, when come to the claimable input VAT, before computing the allowable input VAT, you should need to take the disallowable component. I have explained with reference to input VAT on the local purchases. Then we need to take it the apportionment, and we need to take the what is the disallowable amount with reference to the exempted supply, and we need to take the allowable input VAT. Okay, don't forget these things. Then local sales inclusive of VAT, which is how to compute, is in the question it has given 21,600. In the 21,600 it is inclusive of VAT. Why? It is based on the inclusive invoices. Then it should be divided by 108 and into 100. Then it is 20,000. This is the value of supply. Never, we cannot take the value of supply with VAT. That's why we need to remove the VAT component here. Then in the 8% it's a 1,600. Done. Now the exempted supply done. I have taken it differently, and the value of supply, the total of these the supplies and the VAT. And let me take separately why now this total supply exempted and the all I have taken here the total. And Puta, the thing is why I have separately taken the consideration of selling of office furniture, because this is this is a taxable activity as defined in the section 83 of the VAT Act in the taxable activity definition, which is relevant to trade, business, profession or vocation. But for this, how are we going to allocate input VAT? It's a given. The common input VAT has not given, it's only given the import and the local. Then it's coming to this first part of the discussion. That's why I have separately taken for me to take the correct totals when doing the apportionments and all. For my easy, when doing the clear calculation, I have done this, okay. Then this is consideration of selling of office furniture is a 2,500. It's given, it is exclusive of VAT. It is a without VAT, then VAT component is 8%. Then this is the VAT amount 200,000. Then total value of the supply for all 149,500. It is included this 6,500 also. Then total value added tax payable 8,840. Done. Then we need to come for the input VAT. We have import purchases as well as the local purchases. In that, in the import purchases 1,150 and on local purchases 3,250. Then this is the total input VAT. From this total input VAT, Puta, we need to look at the what is the allowable input VAT. To compute the allowable input VAT, we should know what is a disallowable input VAT. Then in that sense, the disallowable input VAT I am computing, this is my exempted supplies. Then we need to take the total supplies including exempted supplies which that input VAT has attributable. Now in the question, examiner very clearly provided to manufacture this, the plastic cups which we are supplying to the US, the embassy, it is only manufacturing using of the local purchase materials. Then are you going to take import purchases on this? No. Then we need to take the local purchase. Now the exempted supplies divided by total supplies including exempted supply which attributable to that purchases, and finally we need to take the relevant input VAT. The relevant input VAT is a local purchase input VAT. Then what is the disallowable input VAT is a 1,044. It's a 144. It is my disallowable input VAT. Done. Then how to compute I have given here, which is the local purchase divided by total supplies including exempted supplies and apportion against the exempted supply disallowable input VAT relevant to exempted supplies. Done. Then after that we are coming to allowable input VAT for the taxable period. This 4,400 minus 144. After that, unabsorbed excess input VAT brought forward from previous quarter. In the question, you can remember it has given here, it's a 350 which was carried forward from the previous quarter. Now we have the total allowable input VAT, the summation of these two. Now as usual I am coming to, I think you all familiarize with this, and again don't forget to do this. This is something essential you have to do. In our question we have the zero rated supplies as well as the SWAT supplies lamai, and therefore we need to we have to do this compulsory basis, the apportionment of the allowable input VAT. Then on export SWAT supplies or section 22(7), what's the amount, and again the not belongs to above or, which is the I think there is something this, okay, not belongs to above or 100% of the output VAT, whichever is lower we need to take. Now if we have take this as the A, and if we have take this as the B, then we will take like this. Then what is the first part? Let me again do the calculation here. What is our allowable input VAT? Again, it's the other than the carried forward input VAT, because in the last quarter this 350 tested for the same test and it has done. Make I only the input VAT attributable to the input VAT, allowable input VAT applicable to this quarter we are taking. The total input VAT is the 4,256, this is that, and we need to take the total supplies other than the exempted supplies. This is the total supplies other than the exempted supplies, 140. Then for this lamai, we need to multiply this by the zero rated supplies as well as the SWAT supply. Zero rated supplies 32,500 plus exempted or it is indirect export or SWAT supply, not the exempted, I made a mistake. Then it is the suspended or SWAT supplies 9,500, the total goes, and here then it is 1,272 cents 34. Here we go. Then we can go for the next option, the 100% of the output VAT, 8,840, the 100% of the output VAT, or balance of the A above, balance of the A kyanne, which is the 4,256 minus 1,272 plus, which is the 350, then it is 3,334, whichever is lower. When we are taking here, now you can see when looking for whichever is lower from these two, the lowest one is goes to 3,333, then therefore it is here, then the apportionment has completed. Then again it's a 4,606, same thing after the apportionment is coming. VAT payable, how to compute VAT payable? Output VAT minus input VAT. Now we have the output VAT. Output VAT is 8,840, input VAT is the 4,606, then it's ended up with the 4,234. Then for this monthly VAT payment, in the question it has given the monthly VAT payments, which is given as the 2,850,000 and SWAT credit voucher 760. Now monthly VAT payment is there, SWAT credit voucher, you can see the same amount which in the 8% VAT, then it is claimed, that means all the CRVs or all the credit vouchers the collected by the NPL private limited, then SWAT credit voucher value is still we have the VAT payable for the taxable period for this quarter, which is the 624. Okay, this is end of the discussion of the computation of the value added tax for the 10 marks. Now for 10 marks, what's the maximum time you have to take? It's only the 18 minutes. Then within 18 minutes for sure, or less than 18 minutes, I am pretty sure you can do this with this. Let me conclude the discussion of the question 2 part A, which is the computation of the value added tax. Okay, now come to the part B discussion in the question 2. Again, this is relevant for the value added tax. This is on the input VAT. How to claim input VAT, one of the solid question for you all. Come to it. It has given explain the validity of the above 3 points. Now there are 3 points given. In that you need to explain the validity of these 3 points. Okay, this is the action verb, it's explain. Then if I have came to the here the action verbs in the explain, you can see the explain here. It's in the tier 2 comprehension. In that, make a clear description in detail relevant to the revealing the relevant facts. Then where that relevant facts you need to take lamai? The relevant facts for your explanation, it should be take from the provisions of the Value Added Tax Act. That's the key thing. For the scenario, you have to apply the provisions of the VAT in detail by taking the application part of that information given in the scenario. Okay. Now let me again come to the paper, which is here. It is explain the validity of the above 3 points. There are 3 points given. The 3 points given, in that you need to take the evaluate or explain the validity, whether it is correct or wrong. To whom you need to address management of NPL per the relevant provisions of the VAT Act. Then let me come to the question. The Inland Revenue Department conducted the tax audit. Tax audit, there are with the interviews, it's going with NPL for year of assessment 18-19. Now we are in the paper, it's a 2021, but it's asking on 18-19. Okay, and the Assistant Commissioner highlighted the following points in respect of for the quarter ended 31st March 2019. Then first one, input VAT relating to certain purchase invoices was disallowed. Input VAT which they have claimed in 18-19, it has disallowed. The word tax invoice was not set out on those invoices. Let me come to one by one. I will explain first one and come to second one. Lamai, to claim input VAT, do we need to have the word tax invoice in that? Answer is yes, very clearly yes. There should be word tax invoice where it has mentioned. The tax invoice, format of the tax invoice very clearly given in the section 20 of the VAT Act. Section 20 of the VAT Act, it has given. In that invoice, it should be in the precise place. If I have mentioned the word in the precise place, that it should be mentioned as the tax invoice. Other than that, we should have the date, we should have the VAT registration number of the person who has supplied the goods, we should have the VAT registration number of the person who buy goods, the purchase the goods from us, and again the serial number, and the very clearly what's the price and the VAT amount, the 8%, description of the goods, all these things, the address of the buyer, the address of the seller, all these things should be included. Now, where it has mentioned in the section 20 subsection 2. This is the provisions of the VAT Act. You have to quote from the as per the section 20 subsection 2 of the Value Added Tax Act number, the 14 of 2002 and its subsequent amendments. The tax invoice to claim input VAT, there should be a tax invoice with the inclusion of these things. If it is not a tax invoice, you cannot claim the input VAT. Then therefore, the Assistant Commissioner with the tax audit, the first argument is correct. You cannot, it should be disallowed, that input VAT cannot claim. Done. The first thing. Second thing, I am not going for the detailed answer because I need to explain this. These are very easy things, then I am not going for the detailed answer, but I need to come to the approach. And second one, input VAT on 2 local purchase invoices. Again, the claiming of input VAT on behalf of what, Lamai? On behalf of 2 local purchase invoices dated 20th December 2017. Now look at what is our year of assessment? 18-19. Then for that, what is the maximum? That means what's the last, the taxable period? That means last quarter, what is that? It's a 31st March 2018. It's a 31st March 2018. Now what happened? This is the last quarter. That means 1st Jan 2000, sorry, it's a 19. It is the 18-19. Then it's a last quarter goes to 1st Jan 2019 to 31st March 2019. Done. Then, but this local purchase invoice, what is the date? The date is 20th December 2017. What is the maximum period of claiming the local purchase invoice of the input VAT? It is the maximum period is lamai the 1 year. It is the 1 year or a 12 months. It's even not the 1 year. It's a 12 months. It's given as a 12 months. Then it is the 12 months. It is 12 months from the, or it should be claimed within 12 months from the, or no, before the 12 months belongs to that taxable period. Then what has happened? Now we are in the last 20th December 2017. If I have taken the 12 months, it goes to, and it's a one is 20th December 2017, other one is a 27th December 2017. Then the total value of those invoices was 950,000 years. It should be disallowed. What is the reason, Lamai? The reason is if I have taken this 20th December 2017 one, the 12 months should be completed at least by same date if I have taken 20th or 19 December 2018. Now what's our year of assessment? It goes to 31st March 2019. Then in that, can we claim this for this part? No, we cannot claim. Then other one in the same manner, 27 December 2017. Then within the 12 months period, it shall be claimable. However, for this period, even after that, the quarter ended 31st March 2019, these two invoices claimed. Question is, can we claim it? Answer is no. How to write the answer? Why you are telling it no? Because this 12 months, this provision given in the section 22, subsection 6 of the Value Added Tax Act. Then therefore you cannot claim this. It should be disallowed. What's your conclusion? The view of the Assistant Commissioner is correct. Done. Then the next one, for both invoices. Input VAT on customs declaration based on the CUSDEX on import purchases. Then dated on 15th October 2017, too far. Then amounting to rupees 2,360,000 was disallowed. Rama, is it clear? Then it is talking about the custom declaration. When looking at the name of the customs declaration, you should need to know this is talking about what? Import purchases. Import purchases. Why we need to identify that? What is the timeline to claim the input VAT relevant to the import purchases, Lamai? The timeline is the 24 months from the date of the CUSDEC. Now you can see the date of the CUSDEC is the 15th October 2016. If it is goes to the 15th October 2017, maximum 15 October 2018 if I have taken the extract date. But the NPL has claimed it on 31st March 2019. Can we claim it? No, Lamai, we shall not claim it. We shall not claim it. Therefore, the view of the Assistant Commissioner is very clear because none of these things cannot be claimed. Can be claimed. Okay? Then therefore, relevant provision, again this is for section 22 subsection 6, claiming of input VAT. Then this for the 5 marks. For 3, explaining the provisions of the VAT that you can obtain the marks, one of the easy part of the in the question. Okay, then not only that, Lamai, please go through how there are exemptions, how the input VAT is going to claim the section 22 subsection 6, that particular provision, how to claim the input VAT on all these things. Please go through, and again especially in the value added tax, the VAT on financial services, and the tax which is the administrative process, the appeal procedure, and the assessments, appeal, additional assessments, penalty provisions. Please go through these areas also with the calculation part of it. Okay, now let me conclude the question 2 part A and part B, which is totally we have done the base on the value added tax. The 15 marks with reference to the value added tax in here with these 2 parts we have completed.